So the question on the table here this morning specifically, and again thank you Karen for your question, is understanding correlation of the market pulse, dollar, crude, Dow, gold, and examples in detail as far as what to look for and so forth. When you're looking at the market pulse, number one, thing to remember is you're not looking to set up trades from the market pulse alone. The market pulse is always going to be secondary correlation. So if we take this daily chart of the dollar, for example, okay, the only charts that I'm going to be looking for correlation from this daily chart of the dollar index are going to be daily charts of dollar correlated pairs. Now, every major and every COMDOL has a certain aspect of dollar correlation to it. So this is going to be a secondary tool for primarily the Euro US dollar, the dollar Swissy, the dollar yen, the cable, and then you get into the COMDOLs, the dollar Canada, the Aussie, and the Kiwi. Okay, so the focus here isn't necessarily just on the symbol, on the actual market pulse market itself, but also the time frame. So that's number one, time frame to time frame, right? Oranges to oranges, apples to apples, that type of thing. That's number one. Number two is an overall directional understanding. So if I'm looking at the US dollar index and the Euro US dollar, and we'll do the Euro US dollar in the red here. Okay, so there's a correlation of how these two markets plot together. You can see it's almost perfectly inverse. So if we understand that the market pulse market number one is a secondary correlation, we know which pairs it's going to be correlating to. We need to know how they're correlating. They're not always sympathetic. Okay, we can see here this one's inverse. And the correlations can actually be, like this one's very strong. It's a strong inverse correlation. Now what if I go ahead and switch this one to the dollar Swissy? You can see this is a fairly strong sympathetic correlation. We also know these correlations can, well, come and go, for lack of a better way of putting it. They can strengthen, they can start to march the beat of their own drum, mainly because we know that the only factor on, for example, the dollar Swissy is not the dollar. We know it's the US dollar, and we know it's a Swiss franc. So we have all those components and markets and factors that affect the US dollar, and then all those components and factors that affect the Swiss franc. Right? So national events in both countries. And then what we're boiling it down to at the Forex is what seems to be independent events in the US and independent events in, say, Switzerland. When you bring them together and you're comparing the strength of the dollar versus the strength of the Swiss franc, that's where you start getting these understandings as to, okay, is the dollar strengthening over the Swiss franc? Is this Swiss franc strengthening over the dollar? And yes, also, is the Swiss franc or dollar weakening against one another? It's not just strengthening, because sometimes they can be weakening, and it's not just semantics. Understand where the strength or weakness is coming from, because the dollar, quite frankly, could hold steady, and the Swiss franc could strengthen or weaken around it. Just as if the Swiss franc can hold steady, and the dollar itself can weaken or strengthen around it. How do you know? Typically, the best way to sort that out is going to be looking at different fundamental releases, data. You can usually tell by looking at the dollar index as well. If you look at the dollar index by itself, that's one of the reasons we have it as a market pulse. The dollar index is moving today. It's bouncing off that 78 area. We can look at crude oil. We can look at a lot of other factors. Is the factor of who's moving who necessarily something you need to spend a lot of time on. No, it helps to understand that, though. Usually you're going to sort that out by reading other sites, listening to commentary, and so forth, not just price action, because it is a psychological understanding as well. The reason we need to know that, the reason I don't want you necessarily to spend a lot of time on it, but do eventually figure that out, is because it's typically fundamentals that create that shift of one currency strengthening over another. Okay, as far as bigger term fundamentals, or bigger picture fundamentals. And the other reason we need to know that is that way when news comes out of a certain country, we can kind of estimate the effect to that underlying trend. If they're the ones that are let's say for example the Swiss franc is the one that's so strong. If news comes out of Switzerland that there's going to be a rate cut, rate hike, there's bad data, we know that could affect what's moving that pair right now. Okay, we know that could be affecting the underlying cause of the move. All right. Let's also examine another aspect of it, which is, for example, I think the dollar yen is a really good one because it's got so many different factors. You can understand that with Market Pulse, but you can also venture into, as you mentioned there, Qatar, the carry trade understanding as well. I think carry trades though are still going to come back to Market Pulse and dollar correlated major type thinking. If I look at the dollar yen and the U.S. dollar, and I'm looking at this relationship right here, you'll notice it's not necessarily a great one. We know this because we talk about this every day, but you'll notice it's not a great one. It's not a great one in that you can tell sometimes it's sympathetic and sometimes it's inverse. It's not a really steady one. We don't know what, you can see here back in September, October, they went their own way. They seem lately, as the last, say, month, to have gotten back on track with one another, but the dollar yen can move inverse and sympathetically with the dollar index. It just depends on, what's going on. And I think a lot of what's going on in terms of why and when it will tighten up correlation sympathetically or inverse is going to do with the Dow, and that's where we know that the dollar yen and the Dow have a tremendous correlation. Even that one's not perfect though. Even that one's far from perfect. But you can see for the most part it's that dollar yen Dow connection that we're going to focus on for this particular pair. I'm not really going to do this for other pairs, although specifically speaking, the Dow is a very good measuring stick for the health of, is one of the measuring sticks for the health of the U.S. economy, obviously for the health of the stock market. It's funny that the Dow ends up being the tool by which we measure the stock market's strength or weakness. It's a very small sample when you consider the Dow is really just 40 stocks, as opposed to, say, the S&P, which is 500. But even though it's the smallest sampling, it's the one that everybody follows. Hardly anybody, unless they're market traders like ourselves, can tell you what happened to the Dow. Can tell you what happened to the for example, S&P or the Nasdaq Composite on any given day. That's just not something most people know. But everybody knows that yesterday the Dow was down almost 220 points. Yet, most people have no clue as to what's happening in the S&P or things of that nature. And that's fine. That's fine. That's just the way we tend to look at the markets. And, and just so you know, the Nasdaq Composite was down almost 27 points and the S&P was down 19. But the Dow is where most people focus in on, and you can see that here. Okay, the Dow is where the stock market health comes from, which is why we made the Dow a market pulse, not the S&P, not the Nasdaq. So now let's take it to the second part of this. How do we use this correlation? When do we actually allow it to help us plan for potential triggers in the Forex market, set up trades in the Forex market. Let's do that part next here.